Everyone, welcome to a brand new Tesla update video. As usual, let's review Tesla stock today. We should review the market, let's discuss the current state of affairs and what lies ahead for Tesla. Yes, all that wonderful stuff. As always, ladies and gentlemen, please remember to use the like button if you find this video enjoyable. I am not a financial advisor, and this is not financial advice either. Of course, I share my ideas with my members every day that the market is trading. If you love my technical analysis, thoughts on the charts, etc. For example, it goes without saying that I discussed my ideas with Tesla this morning. I would love to have you there, but to jump right in, Tesla closed the day down 0.6%, which isn't the worst thing in the world. Mainly because it started off pretty well. In the morning it was dipping all morning, so I gave my members updates, at the very least telling them that we're at support, and giving them the support levels below if it were to get a little worse. Still, it held fairly well again. And it's only $3 a month, or $5 a month, which gives you access to everything I just mentioned. After a pleasant gap up, it sort of sold off. After a respectable start, we sold off quite aggressively, actually, quite rapidly. At the day's lowest we were down 3%, maybe 4% or whatever. We were able to recover the majority of it and ultimately closed quite flat. It is of course somewhat underperforming in relation to the market. However, this isn't the worst thing that can happen. It's not the worst thing in the world because of, so, obviously over the weekend, and more precisely yesterday I think, we had that Elon incident. I won't go into detail, but I'm sure if you trade or invest in Tesla, you should know what happened. You know there was a bit of a situation with Elon anyhow, and you know how much of that was attributed to the sell-off. Who knows, maybe Trump did say again that he was going to remove the EV credits. Perhaps that was the cause of the sell-off, but it's difficult to say because these things are difficult to identify. I typically just follow the technicals because of this. You recall how I said that it's kind of an iffy close and that I wasn't really sure either way about the technicals that were recommended on Friday? Well, they sort of proved it, and here is a fairly excellent example of why. Well, for the most part we were just kind of aggressively up and down. But what does this signify for the future, correct? We're still practically in the same place as we were on Friday, since we closed 0.5% lower, isn't that right? Where? Simply said, it's difficult to predict with any degree of certainty what Tesla's true future holds. Why? Well, the optimistic view isn't it? Which viewpoint is bullish? Naturally, we also have this attractive bull flag from the bullish point of view, don't we? Good bull flag, good little move up here. Everything happened as it should have, and we broke out, returned, and have essentially been retesting over the last few days. Is I correct? And theoretically, you should be able to bounce off here like we have been doing. We've been holding steady, and we basically make a lot more, don't we? That, I suppose, is the proper way to phrase it. Expected path. You know, that's the most logical thing to do. But the first reason I'm not really sure about it is because we have this debatable bear flag, or at the absolute least a rising channel, right? You might argue that this was just a huge sell-off of everything we had, and now we're basically creating what might be a bear flag. I do lean more bullish than bearish overall, since I don't think it will be. I would probably lean more bullish than bearish if I had to choose, perhaps around 60-40, 65-35, or something like the Bizarro Valley mania. However, it's difficult to dismiss it entirely, but I don't think it is, correct? Here we would like to at least break above Friday's high, which is essentially 440, to get it to go up to approximately 460 in order to truly nullify this and have this type of more or less invalidated, correct? You kind of want to see it in order to basically disprove this possible bearish argument, correct? So keep an eye out for that in the future. As you follow the Fibonacci from high to low over here, the bears will also be discussing it in this manner. So we decided to do a study of the Fibonacci, and have done so far. As you can see, there are Fibonacci levels in the 4, 5, 6, 1 range, and the next comes in the 4, 6. The bears will most likely try to attack Tesla mostly at those levels, correct? Therefore, I'm not quite convinced after seeing these types of events happen, at least not while we're still in this kind of limbo land situation. Isn't that right? I'm attempting to suggest that there isn't really a clear direction until we at least break 440, as I mentioned earlier, at which point it becomes apparent that the ball is in the bull's court. Or if we basically lose the bottom of this, or what may be the bear flag / slightly rising channel, which would happen sometime this week, around 385-ish, the bears would actually start to gain a lot more traction, right? The level to keep an eye on is 385, which will also coincide with this yellow line here, which, if I remember correctly, I think is the 50 EMA. The 50 EMA should be that. Isn't it the 50 EMA? Thus, that would be the additional thing to be aware of. The 50 EMA is shown by this yellow line. It's sort of a market bias, you know. Again, the market bias is still incredibly effective in place of the market bias. With EMA I'm still not sure which one I like. But this one over here has some really strong crossings. However, it will be something else to keep an eye on, and you know, what happens after the support? Of course, theoretically, we could still drop all the way down here to roughly 385, and then rise off the bottom of this, you know, rising channel trendline, which, at that point Thursday or Friday would essentially coincide with that 50 EMA and should serve as a double support if it were to materialize later this week, or something similar. From here we might be able to surge upward, which ironically would also be another retest of this bull flag breakout we've experienced. This might be another illustration of what could occur. Additionally, keep in mind that Tesla is a stock that frequently falsifies information in both directions. Therefore, I believe that many bulls would be frightened by this kind of move. In my opinion, this is my base case in there. Be a bunch of bears really excited just so the bulls can be trapped here. Once the bears are trapped, we might be able to climb up to 460 from here. That's what I kind of want to see happen, but I'm not sure if it will happen again. We're kind of in limbo right now. However, if I had to lay out a plan that I would like to see happen, don't forget that just because I want it to happen, it doesn't mean it will. Of course, but that's me, who would trap the most people and make the move, which is in my opinion the most confusing. A lot of people will panic up here again, and bulls up here with that are essentially buying right now will panic. Right now bears are probably a little alarmed. The bulls will then begin to panic even more as the bears become agitated down here. I'm sorry, but the bears down here will get excited when the bulls panic from the ones that bought up here, and the bears will panic up here once we take off. Thus, in my opinion, this is the most trappy scenario. Naturally, this is just my view. Let's see, right now. The other reason I'm not ecstatic or jumping for glee, is because I don't think this move will go far beyond 460. For example, if we do break above 440, we might soar to about 460. The reason is that I don't think this will be a very dramatic move much higher, at least not yet. At the very least I believe that the best case scenario is closer to 500, because, as I've already stated and would restate, yeah, we are retesting that email cloud on a weekly basis, but we're hardly even touching it. And the fact that we're still, is what I dislike. A far way from the mean, if you will, on the weekly Bollinger Bands. The market is biased all the way down here, as are the 50 moving averages. As a result, we are still far from two crucial mean price reversion TPI indications. I will reiterate what I have mentioned numerous times. Is this a drawing? That is the reason I bring this up. What is this? It's a trunk. I've already stated this, so I'll say it again, right? The stock will almost always return to the mean at some point if it deviates too much from the yellow or white line which is in the middle, regardless of whether it is moving upward or downward. For example, I'm sure some of you recall when Elon sold shares of Tesla, which was when the company was aggressively selling off its stock. As you can see, we sold off quite aggressively. What did we do though? We didn't simply regress to the mean and steadily bleed back up over the period of, say, months and months and months. In fact, we completed it really swiftly. It was finished after perhaps 2 months. From $100 per share to about $210 per share, we completely dropped. It's a pretty quick, violent return to the mean, isn't it? You need to realize that the idea I'm attempting to convey is that you should never remain too far from the center for an extended period of time, and that's where we are at the moment, which is why many are referring to it as this bull flag breakthrough. Who is going to send Tesla there? It might last well into the 500s. Once more, I don't want to deliver terrible news. I don't want to pretend that everyone else is kind of a thing, and that there's just one guy who's not really enthused. But once more, the major reason I'm worried is that mean reversion is one of my favorite trading strategies, right? I enjoy it. And I prefer purchasing stocks that are really oversold and far away, but only of solid good firms. Not all of the companies this will work on, of course. Any AMD really at the end of the day, or even a Max 7. I get more wary when they're too far from the top, or when they're too far from the mean to the bottom. Again, we're a little bit off the upside in this instance, which is why, even though I still believe that 460 is still a possibility, I don't see us moving much farther than that just yet, because we're still so far from these two lines down here. And I don't like that. Do you? I find it difficult to accept that the stock will rise that sharply, without first returning to the mean, which again implies that we will either drop back into it, which is currently in the, let's say, mid 300s, or, in the end, we don't do much and we basically kind of go sideways in this general area while we wait for them to catch up to us. Either that or something up or something in the middle is what I want to see before I become more confident that Tesla will make its way, not just a move to 460, or in the best case scenario the high 400s. That's my general thought process on it at the moment. Isn't it? From my own perspective, we have a bearish divergence forming over here on the RSI, especially on the weekly time scale. That's just what I'm expecting at the moment. We see a bearish crossover on the weekly stochastic, but it's not a true divergence. As a result, even though I'm seeing these kinds of things, I'm not quite certain that we're going to reach some insane heights. It will probably take some time. It will take longer than people expect, in my opinion. In my own opinion, I might be mistaken once more, but let's wait and see. Naturally, earnings are not that far away. That might be a possible catalyst and significant contributing factor in one way or another. Well, you never know. Hard to say for sure, but at the moment, that's essentially how I see things. Let's wait and watch how this develops. It will take time, but once more, don't be shocked if Tesla continues to be erratic. Indeed, it can still reach 460 and possibly even the high 400s, which is closer to 500. Again though, I don't anticipate much more than that. Therefore, don't be shocked if, in the end, we don't get the huge surge that everyone is anticipating far into the 500s next week. 600 perhaps. It will take a little longer than people expect in my opinion. Again, this is only my view, it might be incorrect, we'll see. Netflix is up 13%, which makes me extremely happy. Look at this, gorgeous. I actually purchased shares almost exactly here since it was oversold. Is the RSI oversold in Bond Japan? That's one of my favorite combinations, man. Only on solid stocks please. Heiko. Jaime Zoli, wrote the psychologist LeBurn on January 9th. That's one of my favorite combinations, man. Only on solid stocks please. Shares on my long-term port were purchased by me. When Netflix hits new all-time highs, nearly hitting $1,000 per share. It's clear that people are quite delighted. In any case, speaking of which, I believe I glance at one thing. We'll see. You do realize how Netflix works. Do you see what I mean? You see what Netflix did? This is essentially what I'm trying to convey when I talk about Tesla, which was a huge rocket before it eventually cooled down. And cooled off very decently. It did in fact calm off somewhat, and as you can see, it returned to the Bollinger Band mean almost exactly. Take a look at that, nearly flawless. Of course, it's not quite there, but it's pretty near, isn't it? Quite near. It's soaring back up now. Thus, this is roughly what I anticipate from Tesla. From a personal standpoint, correct? As you can see, we have a long way to go, don't you think? We have a long way to go. Let's see. However, that is merely an example to illustrate my point. Having stated that, I want to thank you for watching, and I hope to see you tomorrow. Right along, Sten. Right along.